Well, hey, everybody, and welcome to another episode of Keys to the Shop, where we give you insights, inspiration, and the tools you need to grow as a coffee service professional. My name is Chris DiFirio. I am your host for the show, and as always, I'm grateful to have you along with me. We have a lot of episodes, over 1,000 episodes, over 9 years, basically 9 years of doing Keys to the Shop. So go to the website, keystotheshop.com. You can search topics on the website. Better yet, you should be subscribed to Keys to the Shop on YouTube and on Spotify or Apple Podcasts. You'll get notified with new episodes, and you can also search episodes in those players, I believe, so that makes it easier to access great information. And you can just email me too if you have an idea of like, man, I really want to learn about this subject, but it feels overwhelming to have to navigate through like 1,000 episodes. Just say chris@keystotheshop.com and then say, I would like to know about this thing. I would love to give you some recommendations for episodes. But also, if you're looking for coaching or consulting for your business, maybe you're a operator of a cafe and you are looking to expand or refine and move up the level of excellence in your operations or your culture, or implement better values in your business or better systems. We work with a lot of different types of coffee shops and people. We've done this for the last about 9 years now. And there's probably some way that you and I can work together to improve the condition of your cafe, your culture, the quality. Basically, we take this holistic approach to helping you run a great coffee shop and, have and make it sustainable for you as well. So reach out, chris@keystotheshop.com. And if you're listening to this, this is the week after we had our webinar. Now, that webinar came and went, and it's not going to be the last time that we have this, by the way. We're going to launch that webinar again. So you'll have an opportunity to get on that call with us, to get on that live webinar experience. And it's really powerful because we get to actually do a lot of Q&A afterwards, which really drives home a lot of the points that we make about excellent operations, people and culture, and quality in your cafe. So be looking out for that. And like I said, reach out if you have questions or a desire for coaching and consulting. Now, today's episode is brought to you by our friends at Arto Brick and also the Barista series from Pacific. Now, later in the episode, I'm going to talk about them. But right now, I want to talk about our guest today, of course, and that is Kim Logsdon, who is a CFO and a cash flow strategist working with entrepreneurs, small businesses, especially right now in the coffee space with her company, Caffeinate Your Cash. So after running the family businesses and selling those businesses, Kim began consulting entrepreneurs, including coffee roasters and coffee shop owners, to help them address their cash flow issues and challenges and create financial stability. And she serves to coach coffee business owners to face those finances using the Profit First cash management process. Now, I heard about this Profit First system a long time ago, years ago, and I've listened to the book, and I thought, it's really interesting. And now, all these years later, a couple of our Keyholder Coaching Group members mentioned that there is somebody doing this with the coffee industry, and that was Kim. And I reached out to Kim, and Kim was gracious enough to say yes to join us on the show and talk about her work, where she serves to coach coffee business owners in that capacity of like getting a hold of the finances of their business so they can actually pay themselves and be prepared for the future. She implements something also called Pumpkin Plan, business strategies, and all of this serves to help people drive their margins higher, to gain control of their cash flow, generate more cash flow, be prepared for the future, plan for the unknown, pay yourself. That's why it's called Profit First. And this is what we're going to talk about in our conversation today with Kim, is what the process is, what the unique application is for coffee shop owners, what are the common things that happen in small businesses that cause them to get behind on things, what are the psychological hurdles, what are the next steps that people need to take in order to gain control using the Profit First system. So you're going to get a lot from this episode, because it really does kind of pinpoint one of the biggest Achilles heels of the industry, and that is just kind of hoping for the best with our finances and not actually taking control of it. That's something that Kim helps people do. And so at the end of this conversation, I think you're going to be inspired to at least check this out and at the very least, to take a deeper look at your money and plan for the future and start putting a meaning and a purpose to every dollar that comes into your business so that you can create something better in the future on purpose and not just hope for it. So this is going to be a great episode. I'm grateful for Kim. So let's get right to it. Here now is our conversation all about profit first for coffee shops with Kim Logsdon. Well, Kim, welcome to Keys to the Shop. How are you doing today?
I'm great, Chris. Thanks for having me.
Oh, I'm glad to have you on. You know, it's one of these things that seems meant to be because your name got brought up a couple of times by people who I have in some of my coaching groups as somebody who's really helped them financially. And I've heard also a lot about the profit first system. A few years back, I think I listened to most of Mike Michalowicz's book on profit first. And then I discovered that there's kind of like a specialized field of like food service and in your case, coffee shop and coffee roasteries. And so this feels like I said, it's meant to be. So
Little serendipity.
yeah, it's a little serendipity. Yeah. So I feel like first things first, of course, you how did you discover profit first and then describe what profit first is? How did you get into all this?
Yeah, exactly. So my background has been finance all my life. I spent most of my career in banking, helping small business owners. And when I became an entrepreneur and started as a CFO of my family business, I was looking to add financial consulting to my clients through the company. And I was looking for a methodology to help my small business owners make sense of their money. And I found Profit First. And luckily for me, I'm in New Jersey, and the Profit First headquarters is about 20 minutes away from where I live.
Yeah.
So it was very easy to reach out to the team, to Mike Michalowicz and his business partner, Ron Saharian, to join the Profit First community.
That's great. So you're discovering this framework and you come with already a lot of knowledge as a you know, you were made CFO for a reason. You helped people in small businesses and yet you were looking for something else. What exactly, like, why were you looking for something else? Was there something lacking? Was there just a little bit of something that needed to be added? What was behind that?
Yeah, I find that small business owners are amazing at their craft, right? So I work with a lot of coffee roasters, and amazing at their craft. They have so much to give and share with their community based on coffee. But the business side of it, the cash flow side of the business, doesn't always come as easily. And was looking for a straightforward methodology that I could work with my clients to help them predict their cash flow a little bit easier, help them to understand within their business what may be broken when it comes to cash flow, and how um, business owners see that they have all this cash coming into the company. Then why do I have nothing to show for it at the end of the day? At the end of the
Yeah.
year, like, where did it all go? And the profit first methodology is one where we set up separate bank accounts. We set up, individual plates of our cash, and we put our cash into specific bank accounts that relate to what is happening in our business. So in terms of a coffee shop, we would set up a coffee bean bank account, or we would have our labor bank account, so that we're starting to assign a purpose to every dollar that comes into our business.
Right. So it's budgeting in some sense.
It's creating a spending plan.
Okay, and the difference it's the money that you're going to spend as a spending plan. What's the difference? Because I hear that a lot. That people say, "Look at all this money going in," and people do feel like they are should be happy. They should have a lot more to show for it, but I don't. And you know, for homeowners or people who are doing home financing, they think the same thing. Like, I've got a paycheck, and so this is kind of like a small business version of just like knowing a little bit more about where the money needs to go. You know where it's coming from, I suppose, right? But now it's so you said tracking every dollar, and so again, let me just ask this question then: what is the biggest thing that people who start this methodology need that they previously, even though they might have had some good practices, completely ignored?
They need a plan for their cash and they need to understand where it's going. What normally happens, what happens is I start working with a client and their numbers are, they don't want to face their finances. They don't want to take the time. They've been trying to figure it out and they have not had the opportunity. Again, they're so good at their craft, but they haven't had the opportunity to sit down and face their finances and come up with a budget or a spending plan, and they are like, okay, where is all this money going? And where is it going? What is my current state? And what is the future state? Should it look like in the future?
Mm.
And they just don't know, right? Because they don't have any comparisons. A lot of us, and I'm sure you see it too, a lot of the coffee shop owners, we sit out there by ourselves and we're trying to figure it out a lot by ourselves. But this methodology brings years of research with other small business owners to say, okay, even no matter what your current state is, let's work to get you to a future state. That might take 6 months, it may take 12 months, it may take 36 months, but let's get you on that path so you can achieve a life where you're paying yourself. Like that's a big piece of what we work towards, is that the owners aren't just paying their employees and paying their vendors, but they're also paying themselves with this methodology.
So then it's almost like you're assuming that it's a management of money issue that will allow them to more likely, revenue notwithstanding, like pay themselves.
Mhm.
But if they don't know where those dollars are going, what it should look like in the future, where are the most likely leaks? Are people simply purchasing more things than they need to purchase because they don't realize they should be funneling that money into other areas? Where is that waste that gets kind of cut off when they implement a profit first system?
Thank you for that question, because with Profit First, what we're setting up is probably 5 bank accounts for every business owner. Say if you have a coffee shop, and a roastery, we might look at combining all that, but we'll have 5 bank accounts for you. You have one account, your income account, where all the cash comes in. Then you would have a profit account where you put some percentage or some dollar amount into that account for either profit. I'll just say profit for it now. We can also use that profit account to pay down debt if you're in a very heavy debt situation. Then we set up a cost of goods sold account. So all the costs associated with running your business, all of, your coffee, your dairy products, your pastry, all go into your cost of goods sold account. Then you have a labor account, and that's going to pay like all of the baristas, maybe the front of the house, the back of the house, depending on how big your shop is. And then we're going to have operating expense account. And then we'll also often set up a tax account where we'll have both tax and so federal tax as well as sales tax go into that account. So we ensure that our small business shops pay their sales tax, that they have the cash to set aside. And we take our 100% of all of our cash that comes into our income account, and then we divide that up percentage wise to the other accounts that I've just mentioned. So, for example, to start, we may just put 1% into our profit account. We may put 30% into our cost of goods sold account. We may put 25% into our labor account. And then if your sales tax, depending on your sales tax, depending on what state you're operating in, you could have between 5 to 10% in sales tax that you need to set aside, with the balance going into your operating expense account.
So when you do this and you think, okay, everything is going to go into these accounts, somebody who's already in debt from a small business loan and someone who's already, said that, oh, I'm going to buy this new machine, and or I did buy this new machine and I've got to pay this down. They're going to say, well, I can't put that money into these accounts because I got to use everything that comes in to just like knock out this one thing. How do you navigate the things that people are already kind of knee deep in, and also kind of trying to get them out at the same time? How do you overcome that hurdle?
Yeah, so a couple of things. when in your situation, so say I have a situation where a client just bought a new trailer, they're installing a new espresso machine on the trailer, refrigerators, fitting it all out. So, let's just say it's a $50,000 investment. And what we would say to that is we have monthly debt service associated with we borrowed the money to purchase the trailer and the
Yeah.
equipment. So we would now say we're going to use our profit account to put now we're initially in my example I said 1%. Well, that's not going to be sufficient enough to cover this debt service, so we
Yeah.
may need to put more like 5 or 10% in our profit account, because now our profit account is both going to be available for us to have some excess cash in the business so we can celebrate every quarter that we have a little bit of cash as the business owner,
Hmm.
as well as monthly take out that cash that we need to service the trailer debt and the espresso machine debt. Because what's going to happen is that a point in the business, 3 years down the road, say the trailer's going to get paid off, the espresso machine's going to be paid off. And what I want the business, what the business owner to strive to do is then keep putting that same 5% in your profit account.
Yeah.
And because you've already been doing it, your business has already been trained to put 5% in that profit account.
Mm.
So
Mm.
keep that money in the profit account. And now that that cash now starts to accrue to you as the business owner once you're debt free.
Right. So this is a technical thing as well as sort of it's a psychological shift that you're hoping people take on, right?
Correct. Yes. It's very much a mindset of really being able to say, I'm assigning a purpose to these 5% of, $5 of every 100 that come in. I am assigning to pay my debt service. And then it accrues to you as a profit, the profit of the business.
And I imagine also for people who want to set aside money for this year, people are thinking, what's our budget for 2026? What kind of money do we want to spend on marketing and materials? So the percentages will go up or down dependent on how much future planning a business does. Is that the kind of very common thing that you see with your clients with coffee shops? Like there's a future casting of expenses that they have to include in how much money they have in each of those accounts.
Correct. Exactly. And so you may say, like, okay, based on, I set my allocations for cost of goods sold at 30% in 2025. Based on the performance of my shop and where inflation has gone, I think I need to increase that to 31% in 2026. So we would
Mm.
make that adjustment to 31% starting in January and moving forward. In the event that 31%, you wake up in March, April, and the 31% allocation is not sufficient to cover your cost of goods sold, we immediately know that something is broken within your cost of goods sold. We planned for a 31% allocation of every dollar that came into the business to go towards cost of goods sold.
Hmm.
Now, if that's not sufficient enough to cover our cost of goods, what happened? I'll often
Right.
be with a client and be like, okay, when was the last time we repriced our menu? When was the last time we looked at egg prices, right? To take something crazy. This past 18 months in terms of our coffee bean prices have been pretty erratic for us, right? So what has been happening to the cost of your coffee beans over the past 12, 18 months that has therefore had an impact on your cost of goods sold, and therefore had an impact on something that's potentially broken from a cash flow perspective by no fault of your own. But again, bringing specific awareness to that purpose of paying for your cost of goods sold and how much you plan to pay for cost of goods sold and how much the business is actually consuming.
Yeah, that's a great point because sometimes it's not in your control. But you also bring up a good point where people do have to then say, well, what can I do in my business to maintain what I've dedicated myself to with this process and this program? So the business has to kind of acquiesce to the rule we've made for ourselves is we've got these accounts and we've got a certain percentage that comes out of the business. So if we see it's off, we're going to adjust something about our business so that we can continue to see that process work. Or else and I imagine people do this a lot because of outliers. They'll say, well, the profit first system doesn't work because, see, it's not working, but it's something that's actually an outlier, and it's not the process itself.
It's not the process. Yeah, I mean, we always say that, just the concept of setting aside money, first of all, for profit for yourself as a business owner is an amazing step that you as a business owner need to take for yourself, because
Mm-hmm.
ultimately if the business isn't paying you in some capacity, at some point it's not sustainable, and you're
Yeah.
not going to be able to continue to provide for your team, your community, for your family on that basis. So we want you to become profitable and be paying yourself as quickly as possible. And by implementing the profit first methodology and separating out the, again, assigning a purpose to every dollar that comes into your business, you're creating better cash flow predictability, and then you identify what's broken more quickly. Because again, a lot of what I see is a lot of my business owners don't look at their profit and loss statement every week, every month, every quarter even, right? And they're defaulting to what's in my bank account and how am I going to cover payroll this week. And I want
Yeah.
to get you to the point where you have 3 months worth of payroll sitting in your payroll account, so you never have to ask that question again.
Yeah. I keep on going back in my mind to the pandemic and the cushion that people wish was there for their business.
Right.
So this feels like one of those things where it's planning for the future that you can't predict by at least planning for the future that
Hmm.
you can,
Correct.
right?
Yeah.
So what is it about the small business owner's mindset that prevents them from doing that? Because as we talk about it, we're like, yeah, it sounds like a great idea. But then the behavior is completely opposite. What's the noble but misguided notion? I don't what is it?
That we can all sell ourselves out of the problem,
Hmm.
that we're going to increase sales, that we're going to get increase the transaction size for every transaction that we sell in our shop, that we're going to have more transactions per hour, and therefore that's going to help us get out of our cash flow mess. We have a lot of cash
Yeah.
flow chaos, and we feel that, okay, well, I took out $300,000 to build this shop, and I have, employees I have to pay, and I have rent that I have to pay on top of that debt service, and I'm going to power myself through until I'm profitable.
Yeah.
And the alternative reality that Profit First offers you is, well, let's start saving for that. Let's start saving for that inevitability that we're going to have a coffee shop, a brick and mortar location. How about, in terms of, let's start with a coffee cart. Let's start with our coffee business serving coffee at the farmer's market, where we have a very low, like, expense and barrier of entry. And then over time build to, okay, we're going to take on $300,000 in debt, and $2,000 to $5,000 a month in rent expense, and then have all of these fixed costs that the coffee shop needs to cover. And so
Yeah.
what we like to look at with Profit First is start saving the money now before you get into a position where you're like, I'm going to sell myself out of this.
Yeah. And we've said this on the show before where your success often it feels like you're being bullied by the success of your business, where you get a lot of people in and it just means more work. But if you don't see the profit from it, then it doesn't feel like a good thing. You're supposed to be happy that you had a record day, but it just creates more work, but no progress. So it feels like maybe one of the things that people have to overcome too, and I'd love for you to talk about this, is saying no to some of the things that kind of continue us down the debt path. Like we're
Mm-hmm.
gonna not only we're gonna sell our way out of it, but maybe some people think they're gonna spend their way out of it, or
Correct.
in a sense. Like what's the opposite then? What's the spending mindset where it feels like now you have to do less things in order to do more in the future, I guess.
Yeah, there's the concept of the shiny object syndrome, right? Like it's like, oh, I really need this new, espresso machine, and that's going to change my life. And if I have this new machine, more people
Yeah.
are going to come. And yeah, okay, if you're adding, more heads to the machine and you can pull more espresso shots per hour, sure, but you still need the people to come into the shop. And so in the scenario like that, I would say, okay, well, let's get to a point where our wait times are, beyond what people will stand in line for, right? So if you're going to wait half an hour for your coffee or your espresso, that's probably a breaking point, right? So you want to get that down to more like 15 to 20 minutes of wait time. And then you would say, okay, well, if somebody's waiting 30 minutes, I should be generating sufficient cash flow, right? Could you have enough activity? Or is there something else wrong? Is there something else wrong in the training? I've worked with clients who are actually training employees, and it actually slows down the rate that they can get their drinks out. So not
Hmm.
only is the rate number of drinks sold per hour down, but now their labor costs are up. And
Right.
during those months or those weeks, we very quickly identify what was broken that week, and we understand, oh, okay, that
Mm.
situation, that cash flow drain is going to disappear in 2 weeks because everybody will be trained and we'll be back to full staff and efficiently getting the drinks out in a more expeditious manner at our normal rate going forward. So it just identifies those challenges that you're experiencing as a business owner so that you can make adjustments, and then be in the mindset where, like, okay, I'm not going to start hiring new people to come onto the bar until I have enough cash to get me through what I know is this slow period that I'm going to face for the next 2 to 3 weeks.
Okay, that makes a lot of sense that people would have that mindset of the shiny object, and it's what I need right now because there's a tension. I feel it. I feel like we're not unfeeling. We see there's something wrong, right? It's just that if we're not going to have a studied approach towards it and an intentional approach towards it, then it feels like you're probably going to make a rash decision. And what you just described is one of those, hey, it's going to be done in 2 weeks, but there are other things that are not 2 week issues. They're broken in a more spectacular way.
Hmm.
you know,
Yeah.
what are the things that people should look out for in their businesses that are a little bit more permanent than those little blips where labor's higher because we are investing in order to do more later, but maybe it's prices or something like that. But what do you find is a little bit more like now you've got to really adjust a lot, like the system to suit the broken part?
What I've seen, this is one example, is a lot of coffee shop won't realize that they have seasonality in their business. So if you're a
Mm,
coffee shop that's located in a university town, you'll experience slowdowns in your sales in June and July and a little bit of August while the students go home. And then they come back in August and September and everything's great again, right? And then December, you have another slow period where 50% of your population of the town disappears for 4 weeks and then comes back. So that's something where it's like, okay, let's identify that the coffee shop has this seasonality, and let's plan for that and realize that we know we're not going to just have less sales and less labor, but we're going to actually accumulate cash in our business during our busy September, October, November to
yeah.
then cover the cash need that we have until mid January when the students come back. So it's looking at that as a challenge, like analyzing your seasonality. In terms of other items that can happen in your shop, overscheduling. If we're not looking at our labor cost percentage, and again, most software systems today will tell you like what it was daily or weekly. But I mean, let's really look at it, right? Let's go down to the hours that we're scheduling, not just the pay rate that we're paying out, and then analyze those numbers. And I've seen situations where people are just like, there's 3 people on the bar and there's nobody coming in,
Yeah.
right? So now it's like, is this a challenge where should we even be open? Or who's in charge of scheduling? Oh, well, I thought you were doing scheduling. No, you're in charge of scheduling.
Uh-huh. Yeah.
And just being clear on who takes ownership and responsibility for scheduling who's on the bar at any given time, who's opening, who's
Mm,
closing, and bringing awareness to those challenges, and taking ownership, and then sitting down as a team, because that's the other thing that Profit First allows you to sit down with. If you have multiple business owners, you can say, I set this plan, this plan isn't working. We need to recalibrate because we agree to a plan. And if it's not
Yeah.
working, then let's recalibrate. And then what does that new plan look like? And let's agree upon now what's the new plan.
Well, hey everyone, it's Chris. I hope you're having a good time here at the episode learning about Profit First. But I want to talk to you about our friends at Arto Brick in the Barista series from Pacific. So, arto.com or go to Instagram at Arto Brick. If you're looking for a way to design a coffee shop using stone, tiles, bricks that are beautiful, decorative, unique, original, and you want the feel of your cafe to really stand out, the first people you should be looking to is Arto Brick, a family run. Armin and his brother Vod are running it now. It's out of LA. Everything's made in LA from start to finish. It's a beautiful facility, a wonderful craftsmanship. So go to their website, arto.com. But better yet, reach out to Armin and say Chris sent you from Keys to the Shop at Arto Brick on Instagram. Now, we're also sponsored today by our friends at the Barista series from Pacific, and they make the world's premier plant-based performance beverage. The extensive lineup that they offer stands up to the heat from steaming, produces great texture, and it creates balance in the cup. It's because it's created for baristas. It's tested by world-class baristas before it even reaches your shelf, so you know that it performs well. So go to pacificfoodservice.com and get samples in your store. You try it, make the drinks, have your customers taste it, have your baristas taste it. You'll see what I mean. They are the number one in this category for a reason. So again, visit them, pacificfoodservice.com, for the best plant-based beverages for your customers. It's difficult when you're a new business too, because you don't know the seasonalities and the ebb and the flow of business. And so I imagine if you've got a new coffee shop, a new roastery that sits down and says, okay, here's the plan. But, as they say, God laughs at our plans, and there's just like whatever. The year goes weird. I talked to a lot of people on the show. They're like, yeah, we opened in like November 2019. And I'm like, okay, well, let's tell you about that. So how do you navigate, though, the difference between larger companies that have pretty good organizational self-awareness and then somebody who's just getting into it? Do you just kind of build into their expectation, like you're going to have to be a little flexible here, versus the others that are a little bit more like, I think it's going to be more straightforward for an older company?
Yeah, so what I would say to that is mostly when we're starting out, the business plan that a business owner creates very often does not have a monthly cash flow projection or a weekly cash flow projection.
Yeah.
And the larger companies come with a full-blown financial staff, right? They have a
Mm-hmm.
they have a chief financial officer, they have a financial manager, they have an accounting manager, they have somebody who's in charge of accounts receivable, somebody who's in charge of accounts payable, they have somebody who's handling all the purchasing. They have like 10 people at least on their finance team. As
Yeah.
a coffee shop owner, you're one, and there's more, you're doing more things than just the financial role. So that's
Yes.
the thing that I find. And then, so what I encourage business owners to do is when they're starting out, it's like, let's create a monthly plan for the next 3 years. It's not going to be perfect, but
Right.
we need to set some numbers in place. Are we going to do $500 a day? Are we going to do $1,000 a day? Are we going to do $2,000 on a Saturday? What is our plan? And if we're not hitting those targets to get to $30,000 a month in cash income, $50,000 a month in cash income, like if we don't have that plan, we don't know where we want to go, right? Like it's just like it becomes our compass. This plan, this financial plan, this monthly financial plan becomes our compass for what's working in the business and what's not.
Yeah.
And because we have something to compare it to, right? Like if I get in my car and I, say, oh, I'm here in New Jersey and I'm going to drive to Maine, to Portland, Maine. I'm going to put it in my GPS, and Waze is going to tell me where I'm going, and it's going to calibrate for me. And I'm going to know within like 5 minutes of when I'm going to arrive at my hotel in Portland, Maine. We don't do that at our small businesses. And there's actually more at risk for ourselves as the business owners by not putting our business into a plan, a financial
Hmm.
plan, which
Yeah.
serves as our GPS for where we want to go.
It seems distant until it's hitting you in the face, right? You're face to face with the crisis of financial crisis. And we are very good in coffee, I think, especially because we're, I think, very feeling oriented people. We're very social people. A lot of people
Hmm.
open coffee shops. They like want to start a community and share coffee with people. And finances can be some this very it's the ones and the zeros, and it's black and white, and it's very boring,
Hmm.
intimidating, and the connection between it and the people seems to be pretty loose until you get to that crisis point. So I like the idea of profit first, especially because when you loop yourself into the mix of finances, you get the immediate benefit or near immediate benefit of feeling what it's like to actually put your mind on your finances a little bit more intentionally, and you get to do more cool things uh, that you set out to do.
Yeah, exactly. And with the goal of the goal of the process is actually to get you only working in your numbers 1 day a week, maybe twice a month, right? So, because I want you to look at your bank accounts, move your money around 1 day. So pick it, most of my coffee shops, because weekends are so cash heavy, we look at having a transfer Tuesday, for example, where we take all the cash that came into our income account from last Wednesday, from Tuesday a week ago through Monday, and we say, okay, we have all this cash sitting in our income account. I don't want you to touch it because last week's cash should be covering next week's expenses when you're starting out. And then the goal becomes, all right, like I said earlier, we want to build up the cash in your payroll account so you don't have to worry that how do I cover my labor costs from week to week? I don't want you to do that. I want you to sleep better at night saying, I have 2 weeks of payroll covered. I have 4 weeks of payroll covered. And we work together to say, how, how much additional can I put in? 1%, even 0.5% to cover that additional cash need to build up your payroll account. So say we're starting here, it's our first month. We're just operating. We have zero in our payroll account. But as we're planning, we set up our plan. They say, we're going to have $10,000 in our payroll account 12 months from now. On our 1 year anniversary, we want $12,000 sitting in our payroll account. That's $1,000 a month, right? It's $250 a week. Can we do that? Can we put $250 extra into our payroll account every week? Sometimes yes, sometimes no. But at least let's make an effort to try to get there.
Yeah, stepwise fashion, a lot of things are possible if you think about it from that perspective, like the aggregation of marginal gains over time. How long does you typically see it take for these cafes or these coffee shop roasteries to get to that point where you can see the bank accounts have in it something that is a significant and impactful amount, and you can sense the difference in the people that you're working with just energetically, like, oh, this is good. What's the time frame?
I would say about 6 months.
Wow.
Yeah.
Okay.
But you really start to see, oh, where you went from my account was overdrawn because payroll pulled, or oh, my vendor ran an ACH and it pulled like, $1,000 out of my cost of goods sold account, and now my account's overdrawn, and now I'm scrambling to move cash around. That's where we're starting. To 6 months from now, we have cash flow clarity, we have cash flow predictability, we've assigned a purpose for every one of those dollars, and we're starting to build. And now we're not having overdrafts, and we're moving our money once a week. And therefore, the other 6 days of the week, let's say 5 days a week, we're working on the business. We're taking 1 day for ourselves, and one of the days is our finance day.
Mm. So way back in the day, I used to train latte art with baristas, and it's one of those gateway skills that keeps people interested in coffee long enough to learn other skills that then keeps them even more interested in coffee, because it's so immediately rewarding to see, oh, I made something. And I bet you probably experienced the same thing with people who weren't finance people, who maybe get a little bit more, they don't have to be, but maybe they get a little excited about it, but they're not numbers people. Do you get that happening when you see like, ooh, I we made something, like we made some money and I see it working?
Right. I have $10,000 in all my bank accounts right now. Like before, it was maybe $1,000. And the other important thing is you're the one that's seeing that, right? It's not necessarily your team. Your community isn't seeing your bank accounts. So it's really important for you as the business owner to take time to celebrate that savings, to celebrate that success in your bank account. Because it's much, like we were talking about, like buying equipment before, if you went out and spent that $10,000 on a new espresso machine, everybody's going to see that. It's going to be shiny and new, and everybody's going to be talking about it. You're not going to be you're not walking around with a thing on your head that says, I have $10,000 in my bank account. I have $50,000 in my bank account. You're not screaming that from the
Yeah.
rooftops. So, therefore, it's really important to celebrate that as a business owner. Take time to enjoy that cash that you've accumulated, and, we have little celebration parties when we're doing our allocations because, wow, how amazing is it when you actually hit that $12,000 in pay in cash in your payroll account, and that you've really achieved something, just like how you say the latte art. It's like it's it's very similar, right? It's like
Yeah.
you created the beautiful swan in your latte art. Okay, you created 12 months worth
Yeah.
of cash and you have $12,000 in your bank account. Celebrate that, and celebrate that with your team. And again, take time to, pat yourself on the back because it's a huge accomplishment.
Nice. So the last question for you, I think, is about the getting started with this. And it seems like a pretty low barrier to entry because we're not like fundamentally changing, you know, deep financials in your business necessarily. Like this isn't something that you need to have a, real heart to heart with your bookkeeper or accountant about necessarily. It sounds like it kind of works pretty in tandem with people that you already have in charge of money. But I guess that's a good question. Like the people that you need to get on board for this, because you're the owner, but you might have a CFO, you might have
Mhm.
somebody who's the bookkeeper or the accountant on staff or as a service. So how do you work with them, and what are the first steps to get everyone on board and start making this happen?
Yeah, so it's really a mindset how we're going to we want to create better cash flow predictability in our business because we want to be financially stable and financially viable. So we're here for years to come as long as we want to stay in business, right? So the goal is like, if you want to close in 5 years, I want that to be your decision. I do not want it to be the bank's position, or the landlord's position that they're going to make you close because you couldn't pay rent, right? So
Mm-hmm.
it's going to your team of, again, your financial team, which is your bookkeeper, your accountant, business partner, life partner, right? Like however you have
Yeah.
your ownership structure created, with the goal that I want to experience financial freedom. I want to live a dream lifestyle as the business owner of this coffee shop. And I have this methodology that is going to put me on that path to profitability, to better cash flow predictability, so that I don't have any surprises, so that I can, again, make my payroll, build my bank account, and have cash reserves. Because I know the one thing that I can predict is something unpredictable is going to happen, and I want to have the cash to be there when that does happen.
Yes. You can't predict it. It'll happen. The black swan, Nassim Talib, where it's something's coming around the corner.
Yeah. And we'll often say, like, well, let's just call the bank account the unpredictable account, right? Like,
Yeah.
you can name your bank accounts anything you want. You can name it cost of goods sold. You can name it coffee. You can name it rent. You can be very creative
Yeah.
and fun with it. So you can also have an unpredictable account, which means, this is the cash for the unpredictable event.
Yep. So smart. It really is. And there's only so many case studies and interviews with owners and founder Fridays on Keys to the Shop that you can listen to before you get to the sense that that unpredictability of business is a real thing that has to have a real process attached to it. And this, on top of just the predictable business, sounds like a great system for that. So I'm excited to have you on the show, Kim, and to be connected. Can you tell people where they can learn more about the services you offer and learn more about Profit First?
Absolutely. You can find me at kimlogsdon.com. My name is my website. And please visit me. You can find me on Instagram at Kim Logsdon, Caffeinate Your Cash, or on LinkedIn at Kim Riley Logsdon.
Awesome. Thanks again, Kim. Great to have you on the show.
Thanks, Chris. Pleasure being here. Take care.
Okay, everyone. Well, I would really encourage you to go to Kim's website, kimlogsdon.com. You can also go to Kim Logsdon Caffeinate Your Cash on Instagram. It's at Kim Logsdon Caffeinate Your Cash on Instagram, and get connected. Learn more about what she has to offer as a coach to help you begin to the Profit First journey if you feel so inspired. Huge thank you to Kim for being on the show and helping us really get an understanding of why getting an understanding of our money is so important, and how to create a system that's actually going to pay you what you make and help you pay people predictably in the future. See, I think a lot of people, when they first think about this, they got to get over this idea that somehow it's selfish. And maybe you're thinking like, I don't need to get over the idea. I would love it. Well, a lot of people in coffee are definitely likely to pay themselves last, and at the expense of other things too. That mentality bleeds over into sort of a hand to mouth mentality. And what Kim has just got done talking about with us is a mentality of planning for creating more margin, creating more of a sustainable lifestyle for yourself so that you can create a sustainable business for others. This isn't something that just benefits you. It benefits everybody when you've got that cash in the bank, when you've got the $10,000 in each of those accounts like she was talking about. Sounds awesome. So if this is inspiring to you, check it out, and Kim's there for you. And so if you have any questions about this episode, go ahead and email chris@keystotheshop.com. If you're interested in coaching and consulting for your cafe's operations, for people and culture, for quality control and training, systems, and that kind of thing, this is what we do at Keys to the Shop. I am available as your coach and consultant to work with you. Whatever your project is in 2026, if you have it on your mind, I feel like we should talk about it. So go ahead and click the link for a free discovery call, or send me a DM, or just email straight up chris@keystotheshop.com. And that's going to be it for our episode, everybody. I hope that you had a great time. You learned a lot. And as always, I hope that this episode has truly given you keys to the shop.